I think even looking at silver, I think that the price dynamics for silver are even better than gold, because you have a supply and demand dynamic going on right now where the use of industrial silver is going up tremendously. The Silver Institute projects a record industrial outtake of silver, or offtake, in 2024. I really like the trajectory of silver right now. If you believe that there's a bull market potential for gold, I'd say it's even bigger for silver, because silver tends to follow gold in the gold bull market. And on top of that, you've got these supply and demand dynamics that indicate that silver is extremely underpriced.
Silver and gold price are on the move. But as a silver and gold investor, you might be interested to learn that silver and gold legislation is on the move as well. States are considering or passing legislation to give you the right to reclaim what was in the Constitution, to use silver and gold as legal tender. We have a special guest today. You're going to be fascinated by what you learn from our friend Mike Maharrey. He's the National Communications Director for the 10th Amendment Center. Mike, welcome to Ron's Basement.
Thank you so much, Ron. It's a pleasure to be in the basement, I guess. I live in Florida, so we don't have basements here. We just call those in-ground pools.
There you go. Well, welcome to the basement. You know, there's you and I talking, but there's really that third most important person, our viewer who's joining us right now. Sometimes we call them basement dwellers here in Ron's Basement. But why is it important to the basement dwellers that this legal tender legislation, which appears to be sweeping the country, why is it so important to the silver and gold enthusiasts that this legislation gets moved forward?
Well, I think anybody that is a silver or gold enthusiast will first understand that gold and silver are real money, and that the fiat paper that's issued by the Federal Reserve, which is a quasi-private government central bank, is not real money. It's backed by nothing other than the full faith and credit of the U.S. government, which I'm not sure what that's worth. But gold and silver are real money. They've been real money for thousands of years, and they will continue to be real money. And in order for an economy to function as it should, you need real money. You need sound money. We live in a world today where governments around the world, not just in the United States, but everywhere, every government has just abandoned real money, abandoned gold and silver, and they've turned to fiat. Now, they've done this for a reason. Fiat is beneficial for governments, not so beneficial for you, because the value and the purchasing power of your fiat money declines every single day. And we've seen that in spades just over the last 2 years with the high levels of price inflation. The CPI will tell you it got as high as 9%. I would argue that the CPI measure that they're using today is dishonest. I call it the CPI lie. If you just use the 1970s CPI calculation, you're talking probably double what they're telling you today. So, we're talking 18%. But regardless, we know that the purchasing power of our money is declining daily. And so we need sound money. Now, like I said, it benefits the governments. Governments love fiat money because it enables them to borrow and spend. I often will tell people that the Federal Reserve is the engine that drives arguably the biggest, most powerful government in history. We have a $34 trillion plus debt right now, which that's just counting the actual outstanding debt. That's not even looking at unfunded liabilities. When you talk about that, you're getting into the hundreds of trillions of dollars. So the government has created this situation, but it only has been able to do that because we have a central bank that can print money. And, we don't really need to get into the technicalities of how the Fed does that. But in a nutshell, the Fed enables the federal government to borrow. It purchases bonds. It puts its hand on I say its big fat thumb on the bond market by buying bonds with money created out of thin air that gets injected into the economy. And it allows the federal government to fund the warfare and the welfare state. So that's the situation that we're in. And over the years, we've had a number of folks that have stepped up and say, hey, we need to do something about this. Ron Paul famously ran for president. One of his primary platforms was to end the Fed, or at least audit the freaking thing. But I don't think that anybody in Congress, other than a handful of people, really have the political will to do what's necessary to truly reform our monetary system. So the question then becomes, what do we do about it? Because this is clearly unsustainable, and it is clearly harming the average person out there, the people sitting here in our basements listening to this show right now. You're being harmed by what is effectively an inflation tax. They don't want to tax you honestly, because you would revolt and you'd stop voting for them. So they use this stealth tax of inflation in order to continue the borrowing and the spending. So what do we do about it becomes the question. And as you alluded to, we've got a great movement going on at the state level, as the federal government continues to just dig a hole deeper and deeper. Some folks in the state governments are looking at this and saying, we've got to do something. And so there have been a number of steps that have been taken in various states across the United States in order to free up gold and silver and allow them to be used as they were intended, as real money. And some of these are kind of legal steps in terms of legal tender, making sure that people can actually use gold and silver money as money. And then some of them are more practical steps of actually attempting to create transactional currencies that are backed by gold and silver that could compete with Federal Reserve notes. And ultimately, I'm a free market guy, right? I believe in free markets. I believe in free markets probably more than most people do. And I think money should be determined on the free market. I don't think government should be deciding what the best money is. I think the people transacting business ultimately are going to decide what the best money is. Now, as I mentioned already, for nearly 5,000 years, people have chosen gold and silver, and they hold all of the characteristics. Aristotle listed the number of characteristics that kind of make good money. It has to be portable, it has to be durable, it has to be divisible, and it has to be, I think I said portable. There's one more that I'm not pulling off the top of my head, but it has all of the things that make for good money, whereas paper dollars do not. So I think gold and silver would win on the market, but where we are now, we don't even have that chance. Now, we could talk about the constitutional issues, and I think they're interesting from an academic exercise. The fact of the matter is, states are only authorized by the Constitution to take gold and silver as legal tender. There's nothing in the Constitution that authorizes a fiat currency created by a quasi-government private bank. It doesn't exist. Now, anybody who's followed government at all knows that the Constitution has very little meaning for most people who are in power. They're going to ignore it to the extent that they can. So it's up to us. And it's interesting because if you go back to the founding generation, you will hear some people say, the Constitution has failed. I don't think the Constitution has failed. I think the people have failed, because ultimately, if we're going to have liberty, if we're going to hold government in check, it's up to the people. Even Madison talked about the fact that parchment barriers were insufficient to stop government overreach. We have to take action. So this is exactly what we're talking about that's going on at the state and local level. And we can proceed by maybe talking about a few of the things that are going on at the state and local level. Or if you have another question, we can go a different direction.
No, I got to stop you. I'm sorry, Michael. I've been contacted by Andrew Jackson and Thomas Jefferson and all the basement dwellers out there, and we want to give you a big high five.
Yeah, there you go.
Because I love what you just described. I want to back up to something you said and see if I understand this correctly, and see if our audience is understanding this correctly. Our government spends way more money than it brings in. So they're faced with a choice. They could either spend less money, which they're not going to do, right? They could raise taxes, which they're not going to do, or they can essentially use printed money directly or indirectly to fill that gap, which dilutes the currency and steals through inflation from everyday people like you and me. Because when they print all that money, generally speaking, assets go up in price. So the wealthy, all their real estate holdings go up in value, their stocks go up in value. But for the everyday average American, who doesn't have a huge stock portfolio, who doesn't own 15 rental houses. They have to pay rent, they have to buy food. They get basically the invisible tax of inflation, and it happens very slowly. So
Mhm.
nobody really notices, right? I want to throw this out and get your opinion on this. Like if America had all been collectively put to sleep 10 years ago and
Mhm.
woke up today and went to the gas station or the grocery store and opened their bills, they might revolt, right? But since it's happened so slowly, this invisible tax, they don't really realize it's going on. And that's kind of at the heart of why we love gold and silver, because it can protect us from that.
Yeah, absolutely. And a couple of things come to mind. First off, you're absolutely right. It's the old story of boiling the frog, right?
Mm-hmm.
You put the frog in the water, it's nice and cool, and you turn up the heat little by little, and it doesn't really realize it because it gets used to it and everything's fine until it's dead. And that really is kind of the government policy with the devaluation of our currency. And, it's funny because you look back at what happened in the COVID era. And I mean, not only did the government borrow and spend trillions of dollars, the Federal Reserve increased its balance sheet by nearly $5 trillion. All of that money was sloshed into the economy. At the same time, they told everybody you can't go to work. So we weren't producing anything. So we had the double whammy of not only did we have more money in the system, we had less to buy. Everybody's still buying stuff because they're flush with cash because the government's handing it out like it's cotton candy. And so when that happened, the inevitable happened. We got price inflation that was, much higher than we're normally used to. So at first they tried to tell us, well, it's transitory, right? Well, and they couldn't get away with that. So then they finally decided, well, we're going to do something about it. We're going to try to sell some of these bonds and shrink our balance sheet, and we'll raise interest rates, and we're going to get inflation under control. What people forget is that inflation being under control still means 2% per year, right? That's the mythical target. So every single year, as a matter of policy, the government is devaluing your purchasing power by 2%. And when you add that up over time, what do you have in 5 years? It's 10%, in 10 years, it's 20%. So it just compounds. And
Yeah.
that's fine and dandy if you're getting raises, and some people do. But if you're trying to save, if you're trying to live on a fixed income, or if you're retired, those people are hit particularly hard. And the poor, they're the ones that are hit particularly hard. But even if you're wealthy, you should beware, because you mentioned asset bubbles, and of course that's part of where inflation goes. And people will say, well, they did all of this in 2008 and nothing happened. We didn't have price inflation. Well, just look what the stock market did. Look what real estate did. That's where all of that money went. And eventually those asset bubbles pop. Everybody that's excited right now about, stock market, S&P 500 being at record levels, that, there's a timeline on that. It's going to implode. It always does. So yes, you're absolutely correct. It is a stealth tax, and it is harmful to the average person. And ultimately it's harmful to everybody, except for maybe the politicians and the central bankers who get their hands on the new money first.
Fortuna Silver Mines is a global intermediate gold and silver producer. Since 2005, Fortuna's best-in-class management has delivered impressive growth and profits. Fortuna's solid financial position and operational expertise allows for performance in any precious metals price cycle and provides a foundation from which to harvest great profits in more favorable metals markets. Investing in Fortuna is an investment in quality, long-term, sustainable production of in-demand precious and base metals. And what do you think about this idea? I was doing a little study on China, of all places. People are going crazy about gold in China right now.
Mm-hmm.
And I was reading some Chinese news reports on why that's the case. And the reason why is because the real estate market is struggling. The stock market in China is struggling. Chinese people generally don't trust the currency. They generally don't trust the banks. And I thought, that kind of, to a certain degree, I could see that scenario unfolding in the West, in the United States. When, like you spoke of, these asset bubbles burst, I think that could be a catalyst for a lot of people to wake up. A lot of people who just, put their money blindly into the S&P 500 ETF, and oh boy, it just goes up and up and up. Like, people are asleep. But when that happens, there could be a mad rush of people, and we don't need a lot of people coming into the gold and silver market
No.
because it really is small. I mean, just a small portion of the people getting out of bonds, getting out of real estate, getting out of the stock market could have a major impact on the demand profile from an investor perspective on the silver and gold market.
Yeah, absolutely. And, it's ironic because one of the biggest buyers of gold right now is the Chinese government, Chinese central bank. Uh, we've had a tremendous amount of central bank gold buying, particularly from emerging markets over the last 2 to 3 years. In 2022, they set a record. In 2023, I think it was maybe 43 tons short of that record. And China has led the way. So what do they know, right?
Yeah.
That we don't. And of course, there's this whole aspect in this whole specter kind of under the surface of de-dollarization. You're seeing a movement around the world, and it's slow. I don't think the dollar is going to collapse tomorrow. But you're seeing more and more people saying, you know what, maybe we should diversify. Maybe we shouldn't have all of our eggs in the dollar basket. You're seeing countries start to make transactions using other currencies instead of the dollar. Oil is being bought and sold with other currencies instead of the dollar. And the dollar's position as the reserve currency is what keeps this whole thing afloat, right? The reason that the US can get away with issuing so many dollars and so many treasury bonds, which are just dollar denominated assets, the reason they can do this is because there's a tremendous demand for dollars because it is the reserve currency. What happens if it's not the reserve currency? And that's what makes me nervous about some of the things we see going on in the foreign policy world right now. They're using the dollar as a billy club. They're sanctioning Russia. They're threatening to unfreeze Russian assets and basically take them and give them to Ukraine. And you can argue, whatever your foreign policy position is that Russia deserves it or this is good foreign policy. But people need to also be aware that the rest of the world is watching. And if you're going to use dollars as a weapon, and I'm worried that you might use that weapon against me, what am I going to do? Well, I'm going to get rid of dollars. And so I think that's probably a big part of why China is moving more towards gold. And it's why I personally am reluctant to hold large, numbers of Federal Reserve notes, because I know what the government is doing is unsustainable. And we're seeing this constant devaluation. And there's always the risk at some point that you will have the whole thing fall off a cliff. And I'm not saying that's going to happen, but it's certainly a possibility. And as you mentioned, it's not going to take a lot. I mean, just look at what we've seen in the gold market just over the last 2 days. We've seen a tremendous increase in the price of gold simply because simply because we got some economic data that indicates Jerome Powell may be able to ease interest rates sooner rather than later. Yeah. I mean, we've seen this tremendous, and I think even looking at silver, I think that the price dynamics for silver are even better than gold, because you have a supply and demand dynamic going on right now where the use of industrial silver is going up tremendously. The Silver Institute projects a record industrial outtake of silver or offtake in 2024. Governments are pushing this green energy stuff, and whether you agree with that or not, governments are going to keep pushing it. It's kind of a recession-proof thing because they're going to keep throwing money at it. So I really like the trajectory of silver right now. If you believe that there's a bull market potential for gold, I'd say it's even bigger for silver, because silver tends to follow gold in the gold bull market. And on top of that, you've got these supply and demand dynamics that indicate that silver is extremely underpriced.
From a supply perspective for silver, I think it's also important to note that according to the Silver Institute and according to people like Keith Neumeyer, CEOs that work in the silver industry, the amount of silver being produced every year by the mining companies is actually ticking downward. And because there's been no money invested, I mean, there's very little money in the silver sector right now, especially the mining sector. There's not a lot of exploration going on. There's not a lot of new silver mines being built. So that only, exaggerates the supply demand. You have potential supply constraints and demand going up. I want to circle back to one thing you were talking about with the de-dollarization. because you brought up this point, right? Like it's not going to happen next month that the dollar's gone. It's a slow process. If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement. But I want to get your take on this because, yes, as the world is definitely bifurcating, and we have the BRICS and the BRICS Plus that are not just talking the talk, but walking the walk of slowly, migrating away from the dollar. But at the same time, you have the United States, like you talked about earlier, with 34 trillion in debt, needing to borrow more at a time when the U.S. needs countries to take our dollars. I mean, it's kind of like the two forces are moving in opposite. We're like, we need to sell debt. We need you to buy our debt. When at the same time, the world's saying, no thanks. We're not so interested anymore.
Yeah, absolutely. And I think, people oftentimes when you talk about the national debt, you talk about the borrowing and spending, a lot of people kind of, yeah, it sounds bad, but nothing's happened yet. And I always respond, yeah, that's true. Nothing happens until it does. You can kick the can down the road as long as you have road, but eventually the road ends. But, we're already starting to see the tremors in this situation. If you look at the interest rates that the U.S. government is now having to pay to borrow, it's been forced up by the Federal Reserve. It's also been forced up by supply and demand dynamics. The more bonds the United States issues, the more that price is going to drop. Yields are inversely correlated, so that means interest rates are going up. And if you look at just over the last, let's just take the first 4 months of fiscal 2024. The fiscal year starts in October. The U.S. has paid more in interest expense than has in national defense. We are very quickly approaching a time when the second largest budget item is interest expense behind just Social Security. How is that sustainable, especially if, as you mentioned, they have to keep borrowing more and interest rates continue to rise? Now, I think that's the great white hope of the markets that, well, the Fed's going to step in, they're going to start cutting interest rates and everything will be fine. But the Federal Reserve can't really do anything about the supply and demand dynamics in the bond market other than buy bonds. And when the Fed starts buying bonds, which we call quantitative easing, when they do that, well, then that means you're just shoving more currency into the system, and there's your inflation problem. So they're kind of damned if they do, damned if they don't, right? If they don't support the government spending, well, the government's it can't sustain it because its interest payments become unsustainable. And if they do step in, then they're creating an inflation problem that eventually could run out of control. So it's a pretty bad situation. But again, I think people get very complacent. And I've talked about this too. You look at what the government and the Federal Reserve did during COVID, just extraordinary. When you look at the amount of money that was borrowed, created, and spent in just basically a year and a half, 2 years, incredible, unprecedented, right? And people will look at that, and now we've raised interest rates. We've got all of this debt in the system. We've got household debt, record levels, corporate debt, record levels, government debt, record levels, and rising interest rates. And again, this is why the markets are so desperate to see interest rates come down. I'm not sure that they're going to come down.
Yes.
And one of my favorite commentators is Jim Grant. And Jim says that he believes that we're moving into what he calls the generational bear market in bonds. And I think if you look at the supply and demand, he's looking at it from a historical perspective, where you see these long cycles in the bond market where there's a long bull market and then a long bear market. He says that just looking at that, we're heading towards the bear. But I think the supply and demand dynamics in the bond market are telling us the same thing. And again, this is just another reason that you want to have gold and silver in your possession, in your portfolio, to hedge against all of this, because We know historically that gold is going to hold its purchasing power. I like this example. If you go back to 1900 and you look at the price of a suit, a fine suit, I want to say it was somewhere in the neighborhood of $35, $37. That was the price of gold in 1900. If you look today, you go try to buy a fine suit. Now, of course, it's going to depend on the brand and whatnot, but generally around $2,000, you can get yourself a fine suit. What's the price of gold today? I think we're at 2,100 today. But if you actually look at it, the price of a suit in ounces of gold has actually declined slightly, which you would expect as production techniques improve. So we see that holding a purchasing power over time of gold. Whereas, the fiat, I mean, you may not be able to buy a suit in 20 years.
Yeah, I have to interrupt you because you said something that I hear very few people say, and including myself. And it's hard for me to verbally convey this message to people, but you said that you're not so sure that the Fed is going to lower rates. And I think it's just a handful of us, but I happen to agree with that. Because of a number of factors going on right now. And I think most silver and gold investors, that's like, oh my gosh, they're not going to lower rates. That's gold and silver. I'm like, no, because I think what's going to possibly happen is that inflation is going to come back, right? And it doesn't matter if real inflation goes up higher than, let's say they leave rates where they are, but inflation goes up higher, that's still great for precious metals. And when you look at the math behind everything, like you said, this just the untenable situation we're in. Is the Fed going to print money and buy bonds? I mean, it makes sense to me that we could be in this situation where even if maybe they raise rates this year, right? I'll go out on a limb and say that, raise rates by a little bit. It doesn't matter because once inflation gets above there and we have that negative real interest rate that is still supportive for the silver price and the gold price. And the only way, in my opinion, that they can keep all the balls in the air right now is by inflating away the debt, by diluting the currency. It's hard for me to kind of crystallize it in a simple way for people, but this notion that lowering rates, and sure, that would be great, right? If the Fed announced this afternoon an emergency rate cut, obviously that'd be good for silver and gold. But I think long term, so what if the Fed has rates at 6%, but the inflation rate's at 14%? That's why we have silver and gold to protect ourselves. And Mike, I love this notion that you described about gold, being this long-term store of value with the suit of clothes. I think it's also interesting when you consider that silver and gold are a couple of the oldest markets in the world. Somebody pointed out to me that the fish market was technically older, but with those thousands of years of experience, what comes with years of experience? Wisdom, right? And that silver and gold, they look around the corner, and sometimes they look around two corners to see, they're very anticipatory. And I think maybe that's what we're seeing right now.
Yeah, absolutely. And I totally agree. I think you hit the nail on the head with interest rates. I think people forget, first off, that the Fed can only control the short end of the rate curve. They can't do anything really about the 30 years into the curve, right? And so they can try to push short-term rates lower, and it will have some impact down the road. But with the other factors in the bond market in play, I'm not even sure if they did cut rates tomorrow, that it would necessarily lower rates farther down the curve. The second thing people forget is that you have to look at real rates, and you hit the nail on the head with that. You have to look at the real interest rate. So, let's just look at it now. According to what the reporting is, CPI is, I think it was 3.1% on an annual basis in the last CPI report. So that's, it's higher than the 2% target, but not too bad. And the rate of the federal funds rate is between 5.25 and 5.5. So if you look at that, then you would say, well, there's a 2% difference there. So that's a positive interest rate. I would argue that, again, with the CPI lie, let's say that we're actually conservatively, let's double it and say we're at 6.2%. Well, now if you look at the Fed funds rate, it's actually negative, right? We're still half a percentage point negative. And it's interesting, if you go and look at the Chicago Fed has what they call the Financial Conditions Index. And it's supposed to historically tell you whether financial conditions are tight or loose. Now, if you listen to Jerome Powell, we're tight right now. Yeah, monetary policy is tight. If you look at the Chicago Fed, the Chicago Index, it's negative, which tells you that financial conditions from a historical standpoint are still loose. They're telling us, oh, we're in this inflation fight. We're kicking inflation's butt. We don't even have tight.
Yeah.
We have tighter, and we certainly have too tight given the level of debt. But when it comes to actually taming price inflation, we're not even at that level. If the Fed was serious about combating inflation, they would be emphatically talking about rate hikes right now. And they're not, because they know they can't, because we have too much debt. So they're trying to walk this they're walking this tightrope, rocking the hard place. Do we really fight inflation, or and potentially crash the economy, which I think is going to crash anyway? I think they've already done the damage. And, again, people will say, well, Mike, we've had interest rates at this rate for, several months. Everything's fine. Go back to 2008. When did the interest rate peak before the 2008 financial crisis? It was actually 2006, right? By 2007, they were cutting rates. The financial crisis didn't happen until the end of 2008. This stuff takes time to play out. And we live in a microwave society where everybody is focused on, the next 12-hour news cycle. What did Jerome Powell say today? And everybody reacts and responds to that. And they're not looking down the road with any kind of historical perspective. And I think that's a dangerous thing. I think those of us who are older, as much as I hate to admit being older, I think there is some wisdom in that, because I can remember, right? We know what happened. And I think there's a lot of people out there on the financial news channels and even in positions of decision making, who aren't old enough to really appreciate and understand what happened 20 years ago.
Yeah, and I think it's a case of normalcy bias or recency bias, whatever the right term is. Like you said, everybody's still dancing on the top deck of the Titanic right now. Everything's fine, everything's great, and it's going to be interesting to see how these things how they play out as we head into the year. What did I miss, Mike? It's been great listening to you. I feel like I have a master's degree in what's really going on in the world right now. What do we owe you,
Well, let's circle back real quick to some of the stuff that's going on at the state level, because like I said, I think that is a place where we're actually seeing some positive policies, as opposed to, the kick the can down the road policies we're getting in DC. And I just want to outline some things that are going on at the various state levels. Number one, we're seeing states talk about officially making gold and silver legal tender. Now, this shouldn't be necessary based on the Constitution, but I think it is an important step, because the first thing that it does is it, if you take a gold coin, the U.S. considers that legal tender at its face value. The legal tender laws that we're seeing in some of these states actually specify that it's based on the content of the metal, right? Not the face value. So that's important. And when you kind of open that door, then it kind of gives people permission, right? If you don't think that you can do it, you're not going to. So some people would argue that the legal tender laws at the state level are kind of symbolic. I think if it is symbolic, it's important symbolism, because it sends a message. And we've seen the impact in Utah, I think in particular, who was the first state to make gold and silver legal tender. And we saw the development of the United Precious Metals Association and their creation of the gold backs, which I actually have sitting here on my desk. These little,
beautiful.
That's gold. Yeah. So that was a direct result of some of the things that they did legislatively in Utah to kind of open that door. The other thing is, and I'd say this is even the first step, stop taxing gold and silver. Right? You don't tax money. If I go to the bank and I say, I'm going to get change for this $5 bills, they're not going to charge me 50 cents to do that. Right? But effectively, that's what a sales tax or even a capital gains tax on gold and silver is doing. It's treating gold and silver as a commodity instead of money. Get rid of the taxes. A lot of states are doing that. I think we're down to, only 9 states still have a full sales tax on gold and silver. So we need to get rid of those. Get rid of the capital gains taxes. open that door and make it easier to use gold and silver. And then the other cool thing that I'm seeing is we're starting to see states toy with the idea of creating transactional currencies that are backed by gold and silver.
Yeah.
In I think it was 2018, the Texas Gold Bullion Depository opened up. It's a state-run bullion depository, and I know a lot of people are kind of like, "Oh, state-run," yeah. But there are some advantages there because states can issue or take payment in gold and silver. It's perfectly fine for a state to say, you know what, we're going to create this system. We're going to have gold and silver in this bullion bank, and we're going to create a transactional currency that's based on this gold and silver, and you can actually put your gold in there and you can use your debit card and you can go buy a cup of coffee and transfer that small, tiny fraction of gold to the person who sold you the coffee. It all happens electronically, and the ownership of that gold that's sitting in that vault changes hands. It makes it possible. I'm not going to probably carry gold coins in my pocket.
Right.
Not realistic. Now, I will carry these bad boys, but, but it's just another way of creating currency competition. And that kind of goes back to my first point. We want to create competition with the Fed. We want people to be able to hold and use sound money without being punished for it.
And it makes, I don't know if you're familiar with Daniel Diaz from the Citizens for Sound Money and Jim Forsyth. They're big proponents of this. And I agree. It makes silver and gold functional. Like you said, like if I come down to Florida and we go out to lunch, we're going to have a hard time finding a restaurant that's going to let us pay with silver, right? We have to go to a coin store, change it. And, and I'm a fancy guy. So you're going to need to, trade in at least 3 American Silver Eagles. So this idea of an asset
buying, by the way.
Buying, yeah, okay. Well, we'll see. But this idea of asset-backed digital currencies and making silver and gold, I would say, modern and functional without taking away the physical component of it, right? If these systems are audited and transparent, and like you said, if I spend a fraction of my gold on a cup of coffee, although I don't go to Starbucks, but at Starbucks, a little bit of gold trades hands. And I want to throw in as well, because I think a lot of the hardcore stacking community has this absolute mindset that if I don't hold it, I don't own it. And I understand that. And I'm kind of that way too, right? Here, I have a 1 ounce silver coin sitting here, but we do want silver and gold to become modern and functional. And I think it's important to note this type of legislation isn't going to prohibit you from continuing to stack your metal. It would only be potentially beneficial for you to be able to use metal to buy things and potentially create a huge new source of demand for precious metals.
First Mining Gold is a development company advancing 2 of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has 0 debt, and owns an interest in 4 additional Canadian gold development projects.
And in fact, several of the recent bills that I've seen specifically say that the state cannot confiscate your metal. So we're people are aware of those things. And I always tell people, one doesn't preclude the other. I agree totally. I have, I'm not going to say how much, but I do have silver and gold in my possession, or at least within reach of my possession. But that doesn't preclude doing other things as well. So, it's kind of like the whole idea of investing in the first place. You want to have some liquid assets for emergencies, and then you invest some things maybe in the stock market or whatever. So, you want to diversify those things. And I think you can also diversify your precious metal holdings in the same way. So, but again, that's up to every individual. If you want to keep every ounce of gold and silver in your personal possession, go to town. I'm not.
Well, let me throw this in, because if I were one of those people, and I agree with you, some diversification is always smart, but I had I converted, and not buy, I say convert. I converted every piece of paper fiat that I ever had my hands on into physical metal. it would make my life very difficult when it came time to pay bills and whatnot. And so if you even have a hardcore stacker who does have most all of their money in silver and gold, they're still using dollars when they go to the grocery store.
Sure.
They're still, so why not have that option to use your, I mean, you know, on top of it. And again, I just think it could open up a huge source of demand. But
Right.
I'm
It basically makes your physical metal more liquid.
yeah.
So,
Yeah.
and just like your dollars. I mean, you know, again, if you just have, let's say you don't have any precious metals, if you're just investing your fiat, you know, you're going to have, you may have a certain amount of cash in your safe. You may have
Yeah.
a certain amount of cash in a money market that's easily accessible. You have cash in your checking account. And then you might put cash in the stock market, or you might put cash in real estate. So you have varying levels of liquidity with your fiat money. There's no reason you can't do the same thing with real money.
Yeah. Very interesting. Well, we are watching closely. I know we share a mutual friend and mutual admiration for Pat Holland from the Missouri Freedom Initiative. I know that Daniel Diaz and Jim Forsyth with the Citizens for Sound Money. There's just doing great work throughout. And I think last we checked, there were like either 24 or 25 states that had either passed in the past or are currently have pending legislation that in some way directly relates to gold and silver as legal tender.
That sounds right. Now I'll throw another name out there, JP Cortez over at the
Oh,
Sound
yeah.
Money Defense League. He's doing some fantastic work on boots on the ground, testifying in committees and really working hard to on that kind of legislative side, trying to get stuff done. So there's a lot of great folks out there that are doing great work, and the more we get, the better. And then ultimately, again, it's up to human action. We need more people who are willing to step out and try to find ways to utilize real money, and we can undermine this Federal Reserve monopoly.
Yeah, yep. I have one final question for you. As you talked about the Federal Reserve earlier, do you agree with this statement? This is my personal belief when it comes to the Federal Reserve, that they've become less of a bank and more of a public relations firm.
I think that's a really good description. I often say that Jerome Powell, you know, you have these policy meetings, right? Every month or so, you have the FOMC meetings, and most of the time they don't actually do anything, right? I mean, how many months has it been since they've actually done any policy with rates or changing anything, right? But boy, everybody waits with bated breath for that press conference. And I just call it open mouth operations, because Jerome Powell opens his mouth and then stuff in the markets happen, right? You're absolutely right. It's a PR firm. And I also like the way Jim Grant describes it. It's a bunch of PhD academics, you know, tinkering around with abacuses and stuff. But I mean, the sad reality is it has a profound impact on our monetary system and our lives. But it's a great way to describe it. I agree with you completely.
And then after Jerome opens his mouth, then what I like to call is they wheel out the clown show. They send out the 12, right? And the reason that came to my mind because a couple of weeks ago, it was Sunday night. I was preparing for the week, and I pulled up like the financial calendar for the week from Bloomberg or Reuters, one of them, and like what's going to happen on each day. And it was all like 80% of it was, and it was the week after the Fed policy meeting. It was all Fed, you know, the Atlanta Fed, the St. Louis Fed speaks. And I'm like, gets me about it is that they wouldn't have to be a PR firm if it wasn't a con game, if it wasn't a confidence game, right? If it was real money, you know, I don't imagine that back in 1965, people were that the Fed had so much sway like they do over the markets now. It's like the Wizard of Oz or something, you know, like they're pushing buttons. And anyway, hey, thank you, Mike. This has been awesome. On behalf of our viewer, right, the basement dwellers, I know they're going to love hearing what you had to say. Like I said, you gave us a kind of a master's degree here in what's going on in the world with real money. If people want to learn more about you, anything you want to plug in terms of contact or information?
Yeah, absolutely. I would really appreciate it if people would check out our work at the 10th Amendment Center. You can go there at 10thamendmentcenter.com. 10th is spelled out, so TENTH Amendment Center. And you can follow along and see the work that's going on in terms of trying to push not only for sound money, but we're broadly speaking working to try to put the federal government back in the box that the founders intended for it to be in, where most of the decision making is happening at the state and local level, and not, we don't need the president of the United States telling us how much water we can have in our toilet. It's an absurd system. So we actually work in all kinds of different issues. I think most people will appreciate the work that we're doing. So you can check that out and even support us there if you're interested. And I do write over at moneymetals.com on pretty much a daily basis covering precious metals markets. And I have a podcast over there. And so folks are interested in that, they can check that out as well.
Yeah, send me some links and I will put them in the description of this video for people to check out. I also want to mention that I did have JP Cortez as a guest here in the basement, and I happen to agree with you 100%. I know he's affiliated with Money Metals, as I understand it, and doing an awesome job as well. I've watched some of his, testimony.
He's really good, really good.
Yeah,
sharp dude.
Yeah, he's a young guy, and there's a lot of young people getting into silver and gold. Yep. Thank you, Mike, and for our viewer, don't worry, I'll beg Mike to come back on here in 3 or 4 weeks. Have a great day. Thank you.